let me recap this. I put a headline right here
Okay.
to kind of start the discussion. Obviously, it's simple economics, right? Demand, supply equals price. So demand all time high, reopening, summer, secular demand, flight, travel, blah blah blah. We all know this shit. Supply all time low. You just remove the third biggest oil supplier and the main European supplier out of the equation. So you have elevated prices. That's you don't need to watch our show to understand this. This is the part where kind
Yep.
of the starting point of the whole discussion. So I was hoping, and I think a lot of the uh, people who invest in the stock market and are interested in what's going on with energy, and I think if you are investing in the stock market, you should be interested because it affects everything, growth, value, everything. I was hoping that this new development with the Saudis saying, "Hey, we're open for more supply, and we're going to meet with Biden, and things are getting the bromance is starting," but 2 days later, Biden trip is not happening, and their proposition, as I pointed out right now in the headline, is very disappointing. So, can you explain to me what happened? How did we go this 180 from this new hope to back to disparity?
So I think there is one more thing which is foundation, that we always see that there are two big oil producers, and we say Saudi and Russia. In reality, there are three big oil producers, which is US, Russia, and Saudi. So whenever we talk about, like when the Biden government talk about more oil, they have not. I mean, Russia is eventually out because nobody wants to buy more oil from them. Everybody is looking for replacement, but nobody is talking how US can increase production. So that equation. So at the end of the day, everyone is depending on the Saudi. So Saudi has a lot of bargaining power at this point. We have also seen that the chip between Democrats and the Saudi is the Khashoggi incident, and at the end of the day, uh, their stand on Khashoggi and how they deal with MBS is a crux of it. Okay, there is no better time for Saudis, at least to resolve this issue. Okay, they want to have. I mean, they also need like US as a strategic partner for a long time, but not at the expense of themselves. So if they have
Mhm.
to do it, they have to do it now. Now, in terms of, we also have seen that despite whatever has happened, OPEC Plus is more united than before. I mean, there is Russia still has say. Okay, we have seen that all the countries are together. Everybody is printing good money. Everybody knows that even if you increase the production by 4 and 5%, this oil price is going to stay high. They also don't want oil to go 200, because in that particular case there is a real demand destruction that starts. So they want
You
to
mean
maintain
they're going to
this.
lose their clients if they let it go too high? They're going to lose a lot of clients.
Yeah, I mean, the airlines will go bankrupt. The airlines runs on a very thin margin, and right now, a lot of money from airlines is going to actually oil company. There was an interview with the Singapore CEO, and people are asking about the high air ticket prices. He said a lot of this money is actually going to oil companies. So the challenge for them is they do not want to enter in an oil price territory where there is going to be a demand destruction. While they want to maintain this premiumness, and 2 years back, 3 years back, the risk for them having oil at $100 was that the shale oil will bounce back, which is not happening at this particular time. We also have seen that the in Canada, in US, in UK, government is talking about taxing oil and gas revenue. So think from forget just take from a industry point of view, that you are going to tax an industry because that is having a lot of revenue that has suffered from last 8 years, and you also want them to invest in projects that are 7 to 10 years long. Why would they do that? So if there is no certainty and there is no regulatory and investment framework where they can protect their own investment, they will not do it. So at the end of the day, the only major investment in oil and gas will happen in the countries which are either struggling from large imports, okay, but open for fossil fuels, okay, countries like China, India, a lot of African countries and Southeast Asia, or I mean, it's going to be Middle East. There is no other place to get it. It's easier to say you can replace it, and I believe you should replace it over the time, but over the time and current time are two different phrases. You need to be very clear on the difference that comes with it and what the price you need to pay for that.
What's the sweet spot you mentioned earlier? Like, price too low, which means they don't want to invest in capex and developing the industry. Price too high, airlines and factories go bankrupt, so you lose clients. What's the sweet spot for OPEC? Like, what's their ideal price? If
I mean, for
the
OPEC,
fantasy price, you know what I mean?
I think for OPEC, like for example, if you take the case of Saudis, the budget balance around 90 to $93. So that means if the price is of 90 to $93, that gives them some surplus. So anything between 100 for them is a sweet price. Okay, so every country has their balancing price for. So most of them actually balance budget somewhere around like 70 to 90. Okay, it's not about like it's not the cost of producing oil. It's the cost of producing oil plus the money you need to pay and to run your country. So that's what we call like the balancing price for that particular country. Now the challenge is that the bigger challenge everyone is facing is that it's outside OPEC, it's not the price that defines the investment, it's the policy framework. That means if I'm Chevron and I'm going to invest in a project that is 10 years long, I need to understand that I will make my money back. Okay, now 10 years is a long time. So what happens is that if you have got a windfall profit in this year and you do not have visibility that how your investments are protected over 10 years, you will tend to buy back your stock, you will tend to pay dividends to your shareholder, because still need to entertain your core investor base. For last 8 years, what was happening was that people who wanted risk and wanted more reward, they were actually going in tech instead of energy. And people who wanted like dividends, they were going into PNU and other kind of things. So the energy investor was not treated well in last 7 8 years. So now they have the opportunity to actually bring back and cater their investors. And for example, like they are saying, okay, government says we want to tax them 65%. Yes, you can tax them 65%, but think back. You take that money. Who is better positioned to invest that money? As a company or you as a government? Okay, whether you take that money and if investment in green energy, that's fine, but that will happen over a time. What will you do for the shortfall of energy in the limited time? So there is only one solution for this whole problem is you need more oil and gas for now, and actually it's good for renewables also. See when renewable became mainstream between 2015 to 2020. This is where renewable became the EV came mainstream. Why? Because the oil price was low and the market was flooded with oil. There was no incentive on premiums. People were not interested anymore in investing in oil, and that is where I mean, apart from like a conventional or thinking, everyone says that oil is high, then you will have renewables flowing. No, you need renewables are more competitive and they will grow more when there is market is flooded with oil. Okay,
So
back to you,
Sachin,
man.
I want to show you an article that came out on Seeking Alpha, and on Seeking Alpha, they actually interviewed the CEO of Chevron. I don't know if you've seen this article where he's talking about.
Yeah, I've seen it.
So in this article, he's basically voicing what sounds to be a very critical position towards the U.S. Regulators, basically saying that you guys have killed the industry. That sounds like that's what he's saying, right?
No, he's right. I mean, and I'm with him
Could you explain
on
his
this.
argument, like in layman terms, for me? What exactly does it mean?
So like we discussed, Tom, just now, that so if you want to invest in more refineries are long-term mega capital project. You need like 7 8 years of investment, and then over the time of next 10 20 years, you will actually break even and make money over that investment. So you need 15 to 20 years of demand assurance, and you need that kind of regulatory framework that where you are sure that your investments are safe. This is what we discuss, and this is what exactly is saying that there is no security, there is no guarantee that if I put this money, that I'll be protected. I mean, I'll make money for my shareholders on that part. So it is very clear that he's simply saying that you don't want U.S. production to go up. You don't want to provide us a framework where, as an industry, we can at least thrive or at least contribute meaningfully. Okay, yeah. I mean, then why we do investment? It's better we buy back stock and we give money to shareholders as a dividend.
So where would he go? Can he does he imply that they can go to other countries to build refineries then? I mean Chevron has to sell oil, they need refineries. So when he says there's not going to be any new refineries, so that means I mean they're not going to go out of business, right? So what is he actually saying? They're moving out to
So
Mexico and shit?
So the answer is two parts. The first part is that yes, they can go in other parts where they can build refinery, but that's not easy. So I'll give you an example for the time being. So if you take the case of India, India imports 87% or 88% of its oil needs in general. So that means even if there is a full blown green drive, you still need oil before you make the full transition. But the downstream in India is actually is I mean the refinery industry has a lot of big players. So somebody like even for the places they are safe, okay, it's not that easy for Chevron to go to China or to India and to build a place for themselves. So it's easier to say like okay we can go out and we can build on refineries, but you can do like one, two, three. That's it. You cannot do it like in a strategic move like okay I'm going to build 20 refineries outside US. So that is first thing. The second challenge they are having is that when you go like for example you're going to build a refinery, okay, there are two ways you do it yourself or you do it in partnership. You go to Middle East or you build with some of the partners there. That's more likely because that's a technology transfer, but then you don't make that kind of revenue, you don't have control on that kind of project. So their projects in downstream, I don't think that many are going to happen if the situation stays like that. There's something else happened in last 5 6 years that people have not noted, and if you go through the shareholder reports, people will say that the super majors they say that they have high graded their portfolio. That means they have reduced the exposure to a lot of countries. So their presence, global presence in last 5 to 6 years is less than what it used to be 10 to 12 years. So it is counter strategy in both ways.
So what does it mean? Like, is this an empty threat? Can they? What happens to Chevron as a company if they don't ever build new refineries in the U.S.? I mean, can they still just? I mean, at some point, they need new refineries to replace outdated ones, right?
It depends. It depends. See, they are present in upstream, midstream, downstream. So they
Hmm.
can decide that we want to reduce our downstream. So they say, okay, more money is in upstream or midstream. See, they are in an integrated oil and gas company because the industry was designed in US in such a way that you make a lot of money if you are integrated.
Hmm.
If that incentive is no more and having downstream exposure is a liability, I mean, yeah, it's better to drop it. I don't think that is happening, but I also don't see a situation where they are going to invest a lot of money in building infrastructure and refineries and new fields in US with current regulatory framework as well.
So what basically needs to happen? It sounds is that we need some assurances that the era of the ESG scam slash renewable fantasy needs to kind of be rejected by governments for oil producers to actually ramp up production.
See, countries can do it with the ESG, but at least not the phony ESG what they are carrying as of today. I mean, as of today, the definition of ESG and Tom, I'm an advisor with an ESG fund. So I mean, I need to discuss and explain it to my investors at time as well. Like what does ESG mean for us as well? See,
I would preface my I would just explain what I meant. ESG as it's being implemented right now is a total bullshit shit show.
I totally agree. It's a lot of greenwashing. There's a lot of virtue signaling. There's a lot of like current issue supporting that will see. It's not serving anyone. Okay, it's not even serving the ESG. It's not serving the climate transition. It's not serving the economy. See, we have a precedent that happened between 2014 till 2019 where oil industry actually shrunk in terms of investment, in terms of their profits, their revenue, and it happened because market was free and there was a lot of oil in the market. Okay, this was also the time when people realized that if my returns on renewables and my oil and gas are literally same, why would I take the risk of oil and gas? Why would I go like when you to see in terms of risk adjusted returns, renewables made a lot of sense then. So the only way out of it is to flood more oil. And with the current ESG policies, no government is at least in the Western world is going to take that kind of risk to upset their voter base. So I don't see any near term solution out of it.
Is this because
So
they're
that means
saying like so if I'm the oil producer or the potential oil producer and you're the government, so it's basically the conversation is like what like hey Tom, can you make more oil because we need to reduce prices? And I was like, no, motherfucker, you've spent the last 10 years kicking me in the nuts, trying to make me go out of business. So fuck you. I'm not putting any more my money into these
Yeah,
projects because. So is this the conversation that's going on?
it's pretty much the conversation that is going on. I
Without the
mean,
kicking in the nuts part.
yeah, I mean, see, whatever you take ESG and whatever you take climate transition, it has to be an inclusive agenda. That means you are not fighting against people; you are fighting for people. Okay, that so idea is like, if you are going to transition thing, how will the industries of today will transition? You may not like it. I mean, the problem what happens in the climate transition and ESG, people take view, I need to kill fossil fuel industry. Yeah, you can kill, but can you really kill? No, you cannot kill. So you create situation where neither you are happy and not they are happy, and I mean they are actually delaying the whole climate transition journey. See, we will need oil foreseeable future, maybe for long future. So we still have to figure it out ways that how to get a meaningful oil with as limited carbon footprint as possible until we have a proper transition strategy and replacements. People have to accept that fact. Okay, like we saw in the case of Germany, like in the Europe, they were shutting down their nuclear reactor. They are saying for last 20 years that Russia is their ideological, economical, territorial adversary, and yet they were depending over Russia. The idea was that at the end of the day we can manage this relationship. So that was an assumption they took, and this assumption is telling that how full lot of people in their head are, that they're thinking beyond their ability, and now they are paying price for it. So today, for example, if you take the case of European Union comes and say, oh, we are going to invest 312 billion and we will get away from Russia. Okay, now break it down. You are going to invest 312 billion. Are you going to invest tomorrow or over 10 years? Over 10 years. Okay, that means the solution of the problem is not going to come tomorrow. Okay, what will happen with this 312 billion? That means you are going to build an infrastructure, you are going to build the regasification plants, you are going to build new LNG vessels. You need to ensure that there are fields offshore which are producing oil and gas that will come to the European shore. So we are talking a series of mega capital projects. Now, last time when Europe has executed so many large mega capital projects under cost, under budget, and on time, answer is never.
Never.
Okay, does Europe? And you need a lot of people with mega capital project excellence. You need people who have expertise in manufacturing. In where are these people? These people are not in Europe. Europe has killed this industry long back. So these people have gone back to countries like Australia, China, Southeast Asia, Latin America. So how would you get these people back? It's not a money problem. It's very easy to go and say, okay, I will invest this much money and I'll get done. There is a IPA study that shows that 98% of mega capital projects actually fail on their attainment, on their schedule, on their budget. So money is not a solution. It's a question of execution, and they are not talking about it how they are going to execute at this point.
I want to show you this tweet. This is from Tom Cotton. I think he's a Republican senator. Uh, and he has this tweet up basically saying the ESG movement. This is from yesterday. The ESG movement helped drive energy prices to a record high, enabled Putin, which I agree with 100%, and harmed Americans. So I would tend to agree with what he's saying here.
I would tend
Would
to
you
agree as
would you change the wording into the implementation of the ESG movement for this to make sense?
well. See, in a way, I mean, you're right. It could be an implementation. See, what happens is that there is a near term thinking and there is a long term thinking. Okay, now what is happening is that in near term thinking, like for example, I was reviewing this company in ESG recently, and the ranking was high, and I was trying to understand why the ranking was high, and the ranking was high because the company has endorsed certain events, and I mean that's pretty much what's driving. But when you look inside the how the company is actually functioning, there was nothing ESG going on there. Okay, so I think that is what the issue is, that people have. So I would agree with what BlackRock has set up as a mission, but the way it was implemented and executed, it becomes more a euphoria and cult rather than any ground movement. So it is way off. It is way off. Like for example, like when you talk about ESG, you have to talk ESG in the same way it is talked on Wall Street and Silicon Valley. If you do not agree with that term, I mean, yeah, you are not ESG. So that's so. For example, say I come from Southeast Asia. Okay, Southeast Asia is an entirely different culture. Okay, people, the way people think about religion is different. So a lot of things which people in Europe or in US will agree on ESG, people in Southeast Asia will not agree on ESG. So where is the inclusiveness here? Okay, are these people or the living, or if you go to India or if you go to China and you say that this is what some few people in Silicon Valley has decided to be ESG, you need to follow it. I mean, there was an interview recently for foreign minister for India, Cheshankar, and this lady was asking there is only two axes in the world, the China and the US. And the guy said it in a very simple way. He said, "See, I represent 1/5 of the world's population. I think I'm entitled to have my own side." And Europe has to come out of this mindset where Europe problems are world problems, but world problems are not Europe problems. So this is what ESG is missing. Like, we don't talk about Africa, we don't talk about Latin America. I mean, are these continents, these people don't exist? They don't have a say. So that is where I think BlackRock has missed it. They made a playbook, and then everybody started deploying that playbook without thinking. And yeah, I think you do something, you get to see the price of that. And this is exactly what is happening. And the challenge now is nobody wants to be the first to roll back things. Everyone will be forced to roll back things because price will keep on going high. Oil will not stop here. Okay, supply chains are not going to go on ease. Okay, you do not have that infrastructure that can support an ESG in a way that people have shown it. So people have to roll back forcefully at some point of time. There will be heads will be rolled. Okay, but yeah, I think people are resisting in doing that, and that's why the pain is continuing at this particular time.
So, is there any chance for us to find more supply of oil right now to mitigate oil prices without getting Russian oil back into the mix? Is there such an
No,
opportunity?
no. I mean, you will get some oil from Saudi and other places, but you see the way they are adding oil is very simple. They are seeing how much oil is disappearing from market. So they're trying to keep the supply flat, but just a little under the demand so that the pressure on the price is high. They also know that this is their window. Oil is not going to stay $100 forever.
Yes.
Okay, they also know that most of the growth in energy is also going to renewables. Okay, they also understand that at the point that this is probably the last oil bull cycle. Okay, so as much money they are going to print in this, it's not going to happen for a very long time.
And they need the US to help them transition into this new non-oil based economy. So, I mean, how long can they stretch this relationship on their end also, right?
See, right now they are in a good spot because the policies in US, especially Biden government, is not very helpful for the US producers. Now, there's a simple question: which oil has low carbon footprint? The oil you produce in US or the oil you produce in Venezuela? Better technology. I mean, so when we talk about carbon footprint, we have to always talk about carbon footprint in terms of on the net basis, and this is what is missing. Okay, we treat carbon footprint like okay, something is very evil, we don't want to touch. But by this attitude, we are actually increasing carbon footprint. That means I don't want to touch, but somebody else on the other part of the world will touch it, and we will buy from that person a
Yep.
high carbon footprint oil. So yeah, it's not going to help. It's I mean, I don't and these are not the industry people forget. Like, it's not about the supply and demand. These industries, they existed for 90 years, 100 years. They have relationship. These people have lobbied up in different governments. So few days back, I was talking to one of the executive, and they were talking about, like, okay, in the data, they want to go and build a relationship with new companies. And my question to them was, yeah, you can build a relationship, but what's your guarantee that these companies are in the business 5 years down the line? So longevity is very important in an industry. These people have stayed in there, so they know how the game of geopolitics is actually driven and how you play a role in that. Okay, we all have seen what oil does in terms of politics and power. So assuming that these people don't have control, and also now they have money, which means that now they can actually illustrate and they can actually dictate how the big oil to big energy transition will happen. So, for example, the gas will play a major role, the CCUS will play a major role because they have the technology and they know they are not going to make money by building more refinery, but they still need to make money. So they will lobby for a favorable carbon tax, which will allow a lot of their CCUS and blue hydrogen projects to actually be profitable, and they still enjoy that profit. So oil industries are not going to go away; they will just turn into big energy. And for example, if you take the companies like Pure Renewable companies are not global companies; they are regional companies at best. But if you go to Shell present everywhere in the world. Chevron is global. So big energy is going to be very similar to what the big oil is today looks like.
But in the short term, it seems like elevated pricing is inevitable based on what you're saying right now. I mean,
Tom, these people have suffered for 8 years. I was there in the industry. I have
you mean
seen
these
how
people
bad.
like the producers, the oil
Yeah.
producers, like
Okay.
negative prices, $10 a
Things were
barrel.
really
Yeah.
bad. Things were really bad. Okay, I tell you like how bad the sentiment was. They have become extremely cost disciplined, and suddenly now they have such a high premium. So you are just printing pure cash at this point. Why would they change the dynamics now? They know that this dynamic is not going to stay forever. But if they can stretch this dynamic, they will fill their coffers and their war chest for the whole energy transition moves. They are not going to change. They are nobody wants to change anything. Everyone
It
likes
sounds to
in the
me like the
industry where
worst
it
thing
is
that could
today.
happen is that, like, if I'm an oil producer, I should be praying for Russia-Ukraine war to continue and sanctions to continue.
See, it's even if the war stops now, the supply cannot come back. Everyone knows that part. So everyone
Why?
knows that even
Can you
if
explain why?
see even if the war stops now, Europe will not buy oil and gas that freely from Russia. Because this I mean the situation has gone to a point where Europe has to stop depending on Russia. Okay, so for example, like if a war stops, it's easier for other commodities but not for oil and gas to come back that easily.
Hmm. There's also this comment right now, which is I think I haven't spoke about it. Finken saying people also forget that oil is more than just energy. Almost everything we use is made from some form of oil
Yeah.
byproduct. So it's fair to say that oil is the biggest contributor to inflationary pressures, right? Out of the so oil and wheat probably are
Energy.
the two biggest, right?
Yeah, I mean, energy. Like we, you remember last time we discussed that and it was. I remember it was just before the that March or high inflation number came, and we discussed that particular time that when energy becomes the main contributor for the inflation, there is no match. I mean, and you know at this point there is no pathway that can reduce. So you know if you go back, like for example, if you go back in 2009. So 2008 oil price was 147. Okay.
Yep.
And then the oil price suddenly dropped to 39.40. And so that particular time, if you see what Saudi was doing, Saudi was cutting like million barrel production per day. So you see, that is the kind of impact you need to bring things back. Okay.
So
And this,
these little spikes are irrelevant for them. They don't care,
yeah, it's just these are just the tactical and the diplomatic move. Yeah, you ask for some oil, we give you like 300,000 barrels.
which is
You
nothing.
want to bring back oil back to 60, 70. You need to figure it out extra 5 million barrel a day.
So you just remove, based on my very layman, non-professional mathematics. So Russia is producing 11 million barrels a day, like at least produced, right? So and also geographically, they're the only producer like in Europe proper. Like if you have Saudi, US, Canada, Mexico, in Europe, like also there's logistics with oil, right? Like this, the location is important. So they're in Europe, they're producing 11 million barrels a day, third biggest manufacturer in the world with about 10% of the global oil supply. You kind of carve them out, and now they're selling for less, but they are selling to India, they are selling to China, they are selling to Iran, whomever, right? So they are still selling this at 80 cents on the dollar, whatever. They're still making good money on this, and these companies are buying cheaper oil, which is great for them, right? But now we are basically fucked because now we just slash demand, sorry, slash supply significantly, and we have no alternatives but to go on national TV and blame Putin for what's going on right now. Did you see that?
I know. I mean, so, and there is a difference up to what extent Europe is screwed and up to what extent US is screwed. So, for example, if you see Europe, Europe is still buying oil and gas from Russia,
Oh
but
wow.
US said, I mean, US said we will not buy, and that's why they are buying less. So US has actually created more problems for them than the Europe has created. I mean, Europe is saying, yeah, we will move away from it, we will ban it, but they have not banned it yet. They are still using Russian oil and gas a lot. Okay, Russian oil and gas cannot enter in US. That is the situation that US has created for themselves. Okay, and oil will always find a way to different shores. And people, it's an industry. That's how it has survived.
But isn't
Okay,
what
now
just happened now, Sachin, changes the paradigm as far as how the U.S. administrations going forward would think about this, rather than thinking about, since the 1990s, the U.S. has been going through this process of the bottom line is everything. Let's maximize margins. Let's ship jobs, production, everything. Let's ship it outside. Let's et cetera, et cetera. So now there's this change where we're going back to like 1985, 1986, where, oh shit, there's geopolitical risks, there's supply chain risks. Not everything is just bottom line profitability, and we want to have production onshore. We want to be energy independent. So if that changes happens, and it probably would not happen with this administration, but the one that will follow, I'm assuming that will have a better understanding of the importance of keeping production onshore. Would this not cause the U.S. Oil producers and also all sorts of oil related companies to actually ramp up production and take back energy independence?
so there is a difference this time, Tom. See, for example, if you take the time of Bush and Obama, okay, the companies coming out of Bush to Obama, so Bush to Obama administration, they knew things will change, but nobody expected things to change like day and night, and that is what is happening between Trump and Biden. The governments are going into quite extreme. So if say I'm an investor and I'm an oil producer, I am thinking next 20 years ahead. Okay, and if
There's
I
no
see
certainty. Yeah, there's no certainty. Like every four
there is
years, things
no,
can fucking change.
yeah, so things are changing a lot, and to be fair, like, I mean, Obama has been my favorite president in US history. So I mean, when I criticize a Democrats and the government, I mean, it's always, it's not something I want to do. But what is happening is that it's a very narrow focused administration at this point. They just have like some title headlines, and they just want to keep those title headlines alive no matter what the cost is. The solution for, see, for example, like, why so many jobs and industries have been outsourced out of Western world, especially Europe and US, because there was a belief that they have the power, so they can manage the relationship and pressurize that even though the critical infrastructure is outside, they can still exert power and pressure to kind of control it. They only to learn after like 10 and 15 years that it is not going to happen. Okay, also what happened with the success of companies like Tesla, and if you see like SpaceX, uh, I mean, Elon Musk, like, for the way he has shown that, yeah, you can make money and business in a lot of other ways also without offshoring things. Okay, if you do a proper vertical integrated supply chain and manufacturing, you can actually build different sources of advantage. So there is a shift that is happening also. The question is, who makes most of it, companies or countries like China or countries like US? I think that's pretty much going to be the defining factor.
Do you find it laughable? Because I do, to be honest, and it's a little bit of a guiding question. I'm aware of this, but I kind of like to ask questions with my own opinion built in. Would you agree with me? It's laughable that after years and years, where the U.S. like when I was a kid in the 1980s, and even in the 1990s, U.S. cars were the best in the world. Like if you got a US like a Chevy or a Ford truck, they were the best technology, best electronics. They were unrivaled. This was like the dream. I always dreamed like my dad will have like an American car, etc., etc. Right? And then what happened is that over the course of the 2000s, the Japanese, the Koreans have completely demolished the U.S. auto industry. Uh, so at this point, GM and Ford and Chrysler are lagging behind for the past 20 years, trying to play catch up, being bailed out by the government, carrying massive debt, basically trying to survive, while they're getting absolutely destroyed by Korean and Japanese and now soon Chinese companies. And then all of a sudden, you have an American company fully integrated in the US that is kicking everybody's ass, taking over the world, and the government is making concentrated efforts. The Biden administration, if you don't like it, unsubscribe, is making concentrated efforts at kicking this company in the nuts and basically saying how great the failures of GM and Ford are and how Tesla should be ignored. I find this just, I feel like we're in the Monty Python fucking skit at this point because this is just not unreal. You know what I mean?
No, I agree. I mean, it looks unreal, but there is a reason for that. Uh, See, in politics, there are some tenets that you need to follow before anything. The first tenet of the politics is the only good things are those that are under my control. Anything that is not under my control is evil. So that's pretty much what is happening. Is like, okay, they don't think that they control Elon Musk. uh, Elon Musk has a lot of say and a lot of power in terms of drawing or making move about an opinion. So they don't control it. So from their point of view, Elon Musk is it doesn't follow that tenet. The second thing is, uh, tell me, Tom, do you really trust somebody who is 75, 80 years and he comes to tell you that I'm taking these 5 steps so that 50 years down the line your life will be better? I would prefer a 30, 40-year guy to make that decision. So you see, these people, they do not have a shadow of the future. There is no accountability here. So people who are going to make that decision, and you also need to remember, these are the people who made decisions for last 50 years, and whatever mess we are in today is because of that decision. So they do not also have the context to make those decisions also. So from their point of view, it's a game of control. It's a game of power. It's not a game of serving people as they are showing, because US is one country. I mean, US is like the way media projects it, it shows that US are two different countries. I disagree with that. I mean, of course there are extreme factions, but I would still say that 60-80% of people are not so different as Fox or CNN shows. Okay, so it is ridiculous, and these are the kind of questions. I mean, like, things go back and you sometimes go back and ask. Like, for example, you and I, we came from a generation, we can never imagine that US lose its power status. This is something which is kind of given for us, that US is always going to be the dominant country. But when you see things like this, then the question you ask is, are these the earliest signs of US losing that kind of dominance because of the people who are ruling the country in this regard? There is no longevity in terms of policy making. Policy changes with every time there is a new administration. That's not going to help.
So the one thing I can agree with you here, and I think this is your argument. I want to tell me if this is what you mean. The most important thing when you invest in, let's say, you're looking at investing at emerging markets, right? And then the first question as a consultant, I was asked by my clients who were mainly Western companies trying to look in Eastern Europe and emerging markets. The first thing they asked me, well, the two questions. The first thing they asked me, we will go to jail if we do this. But the
That's
second
a very
question,
common question. That's a
yes,
very common
the
question. I
second
have had the
question,
same question also.
always the second question was, what's the regulatory governmental supervisory stability of the current set of rules? For example, if there's a benefit for a certain amount of for a specific business operation, how likely it is that the next government is going to come in and change it? So in the emerging market, that was always a question. The strength of the US was always in the stability part. You knew that no matter who takes the reins, the certain basic truths will remain to allow stability, and that makes investment much more attractive into countries like the US. Now, still, in my opinion, the US is still the most stable economy to invest in. but I think the stability level has eroded immensely ever since we had the change of administration from Trump to Biden. Because Biden people came in and just basically said, "Fuck that, everything." Like completely like good, bad, doesn't matter. Let's just throw the baby with the water, sort of kind of thing. And I think it erodes a lot of the incentive for money to flow into the U.S. and also internal investments, like we talked about it. Oil companies, refinery, nobody wants to invest in uncertainty, especially with long-term
So
infrastructure project.
no, I totally agree with you, and you're on the money here. With that, when you are looking for large term projects, so for example, like I was looking some of these mega capital projects. So I was attached with the mega capital project practice with Boston Consulting as well. I mean, published a couple of papers on that part as well. See, if you want to build something in California, I mean, when you see the cost of something is going to build in California, it's immense. It's ridiculous. Okay, and the same thing, like, so the question is, we talk about infrastructure. So what, when we talk about, like, when we saw like this stimulus, this large build back better, and see the cost and what is going to build, it's not smart capital deployment. Okay, so that is what is happening is they promise things, but they do it in a way that creates value for no one. It only creates value for certain people and certain companies. So that is what I think. So see, why somebody like me who grew up in India and appreciated US is that US is a country that gets things done. Okay, they set up a site on something, they get it done. Now when I see today, I see that US still is a country which gets things done, but actually it's not the US government. It's there are certain people in US who gets things done. US government or administration as a whole is actually stopping these people or building policies who are getting things done. So it is very different in last 30, 40 years how things have changed.
So I guess for the last 15 minutes of our chat, I want to pick your brain a little bit on the non-oil related questions. You and I are both very outspoken investors of Palantir, and this is a topic that's been heavily debated. I want to kind of hear. We never spoke about this on air because we mainly focused on oil so far, but I'm kind of known to be the head bull of Palantir on the internet. But I don't think many people realize, because I bring you on in your hat as an energy expert, that you're also quite interested in Palantir. So can you walk me through like a 5-minute bull thesis of number one, why you're so excited about Palantir, and why you think the price is going to come much lower than it is today? Because I know that's what you think.
Okay, so so I work in oil and gas, and my current role involves I'm a data strategy advisor of a very large company. I mean, very large. I could only say I have done several digital transformation projects in energy industry. So that's how I got exposed to, like, what are the different challenges that you get to see with. So when I see Palantir, I mean, and I've shared it in past, in terms of product solution, there is no match. There is literally no match. Okay, I think what people miss is the complexity of data, the velocity, the variety, the volume. There is no way. I mean, all these companies are going to put all of their data at one place. You need some solution which is kind of ontology that works out. When you see how much oil companies spend on data, and you see, okay, like, what is the largest transaction that is happening or happened, it is with Palantir. Okay, so why companies are investing so much money on Palantir? I mean, because the kind of value they get out of it. Palantir has a lot of issues with it, which they need to sort it out. Okay, and I mean, like, even when I met the energy team in Palantir, I mean, I'm very vocal in sharing my view that what they are doing is right, or what were the areas they can improve upon. But when
Can you
it comes,
share some also information later about that meeting? Also, once you're finished with the thesis, is this
see,
okay?
I mean, the discussions, and like most of the time, the discussions you do with the companies are pretty much like under non-disclosure
Okay.
agreements.
So let's just say you met with Palantir team and you had first-hand experience.
Yeah, so the I'm not someone from retail who don't know what they do. I exactly know what they do. I exactly have seen what their product creates in terms of value. I also understand like what are their internal challenges at this point, which is why they are. I mean, like few things they need to sort it out. Okay, Um so product is unmatched. Okay, when I see the macro of the sector, see for me three things are more important when I invest in a company. That first, this company is going to be around in 10 years down the line. Because if a company goes bankrupt, I mean, it doesn't matter how good the product was. So
Yep.
zero debt, I mean, they are critical for US infrastructures and US security and all. And what a lot of people don't know, that companies which are critical for US for whatever reasons, there is always a kind of a backup plan. Like if companies start going into undergoing concern, there is a backup plan to sustain that company, which nobody discuss, and it never comes out on out. But there are people in different departments who take care of this part. So is Palantir going to be around in 10 years? Yes. Okay. Is the sector pretty hot? Yes. I mean, the expenditure in sector, whether you call about digital twin, the data platforms, the AI ML supply chains, AI at scale, I mean, yeah, they are growing at a CAGR of 10 to 30% every year. So that means every company in this sector has a good future as long as they manage to stay around during this recession and downtime. Okay, I do not see a future where Snowflake goes 10 times from here and Palantir stays here. You see, all these companies are moving in unison. They are going up, they are going down. The difference, what is happening, like when you see a company like Snowflake, it has a very high institutional ownership. Okay, so that means its multiples are far higher when we look in terms of a Palantir. But Palantir multiple of 9 versus Snowflake multiple of 28, it's not justified from my point of view. So think about this, Tom. Let's say that Palantir goes and Palantir builds a revenue of 5 billion, okay, which is reasonable by 2025. Okay, and we still take a multiple which we have as of today, which is 9, which is beaten of multiple at this particular point. We still talk about a company that is 45 billion market cap. That is still more than 100% from what it is today. Now if a market bounce back, okay, and people realize that a product is good, and the difference between a Snowflake and Palantir multiple still stays, but it kind of converges a bit, and we talk about a multiple of 15 to 20, then we are talking about a company that could easily be somewhere around 75 to 80 billion. Okay. Now, if the company comes out really well and they manage to sort out their issues they have in the self-serving capacity, I mean, it can even go higher than that. So when I see like in terms of risk and reward, to me the reward is far higher. Palantir has several issues; they really need to sort it out. But like today, the stock is 87% down. Yeah, so many stocks are down at this particular point.
Yes.
I mean, it's Palantir is not the only one. I mean, Tesla is almost like 40, 50, 40, 45% down. I mean, the
Yep.
Snowflake is around 60% down from its top. I mean, AI is down like more than 90%. So when I see this criticism like, oh, Palantir is down from 45 to 6, yeah, but you need to also be very clear that what is macro,
Yeah.
market macro, what is sector macro, and what is company performance. Okay,
Yeah.
the
It's not
company.
like the market went up and Palantir went down.
So the
I think
company
Nasdaq is down like what,
matters.
25% over the
Yeah.
past 6 months. It's the
So
index.
there's
The entire
also,
index is down 25.
and there is also the difference. I mean, like what is happening is because now the amount of passive investing is quite a lot. So when you invest in passive investing, it's a weighted, volume weighted investing. So that means what is happening, the money over the time goes from the bottom of the market to the top of the market. So indexes actually, so when the indexes decrease by 20-25%, and when you're in high tech, there is a divergence. Okay,
Yes.
that is industry or the market is expecting indexes to fall further, but a lot of these companies are already into very undervalued territory. So in my case, because I know the product, I have talked to people in company. Okay, I have talked to a lot of people in their competition, their customers. So my view for them is quite bullish, but that's me.
I would you agree to me that their biggest challenge in the way they sell the commercial side of the product, because obviously they have no problem with the government side. They have that perfected. They have been doing this for so long, and you know what they say: once you're in the government, you're in the government. This is kind of very hard to lose these contracts, especially when they kind of became the uh, kind of the SpaceX to the NASA, like the Palantir to the CIA. This private kind of intelligence agency for the government. But my question is, because I'm more interested in commercial side. So on the commercial side, it seems to me they're faced with massive challenges because even though the product, I agree with you, is unrivaled, and if you don't believe me, watch some of the slides I shown. I've broken down the work they did with Airbus and some of the test cases that appear in the internal presentations with Airbus. You can see that the product is just insane.
Oh, it's
But
amazing. So,
yeah, but Airbus is very
yeah.
different than the US B2B enterprise software marketing and sales because it's a very closed club with relationships being already existent, and your sales force is brand new, it's green, nobody have relationships, and they're a little bit like a bull in a china shop. So they're coming in, and these guys have already invested tens of millions into this shit infrastructure, and then they need to slowly convince them to move. But it seems to me like they're going right now about it, and I spoke about it before. It's like this. Alex has this mentality of, yeah, just destroy everything, let's build it scratch, this is going to be better. Yes, but it doesn't work politically inside these big organizations if you try it this way. While instead you should basically do more of kind of, hey, here's the free feature you can use, and you can learn about the software, and you build lobby around it, which kind of which they haven't been doing.
See, Palantir has made several mistakes. Okay, the first mistake Palantir made was that they didn't invest in their sales force because they thought that product is so good, people will just buy it, and that was a wrong. Because see, in a B2B context, people don't buy things just because it's good. People
Yes,
buy things because they try to visualize that once this thing is bought, how the company dynamics will change, how it will,
especially in enterprise software, especially in enterprise
especially in
software.
enterprise software. So there is a context which is more important. I think this is where they underinvested, and they thought we have such a fucking good product, everybody will just buy it. I think that
He
was
said it in the interview, we don't need salespeople.
yeah. And I discuss like so in my role I spend a lot of time studying companies, like why one company is so good, and then at the end of the day I have to kind of nurture it down to like 5 6 bullets to a senior executive, like why a company succeeds in a certain way. So in a data and digital world, a company to succeed, it has to have certain characteristics. One of the first characteristics, that company has to have a product which is like a killer product. That means everyone wants it. Okay. So Foundry for us is a killer product, but a lot of people in industry even don't know it. So it's a killer product, but people don't know about it. So in a way, it's not that killer because people are still have not reached the point where everyone say that I don't care. I want Foundry in my office.
It's
Okay.
not commoditized like Snowflake, where it's just simple
It's
commodity.
not
Yeah.
commoditized in a way. The second thing is time to value. That yes, when Foundry is installed, it can deliver value fast. So time to value is pretty good in execution phase, but acquiring Foundry, that means reaching somebody in Palantir, then getting the procurement done, is not easy. So the time to value, if you see overall in terms of procurement, is not simpler. The entry ticket is quite high, so you need top down and executive decisions on that one. The next part is flexible and scalable. It is flexible and scalable once it is purchased, but it is not flexible and scalable when you are in the process of purchasing. You have to, okay, either you buy like this or buy like that. Nothing is like product have to be very thin. That means, like for example, a lot of time you are missing something and you say, okay, yeah, I mean this is like $25. I will spend more time thinking about it. If I need to decide, I just buy it. So if the product is thin, that means if you spend time, you will actually waste more money than the product actually is. It doesn't exist with Palantir. The portability, interoperability is top class. I mean, you take the case of BP, they have AWS and Azure in upstream, downstream, whole different ways, but they use ontology to connect it. The domain expertise is something they have worked hard. Their domain expertise, especially in terms of government and medical, have improved, but they need to bring more domain expertise to all the industries they sell. Okay, the low code, no code, the SI integration, the partner ecosystem marketplace, these things they don't exist to make it mark. I mean, they have low code, no code, but can you access it like Bubble IO or Webflow? No. Can you access it like Power Apps at this point? No. So these are the kind of things which are missing. If you go to Snowflake, I mean, Snowflake, I have said Snowflake is a gold standard when it comes for partner ecosystem and client relationship management. There is no company that comes close to it, even the old incumbent. So that is
I mean, they
something.
have a simple product. It's just like a database. Here you go, boom, out of the box.
And
No issue.
every time I interact with the Snowflake team, I mean, it's a pleasure. I mean, these guys they know how to approach the client and how to broach. Their product has certain limitations, but that's why their partner ecosystem is pretty good to help it. So there are things which Palantir has to sort it, but like I said, it's easier to solve sometimes the business and non-technical things when you are talking about the sectors which requires really cutting edge technology. Okay, so in case of Palantir, I think the technology is there. So the question for me is always is that is it going to be a niche company or is it going to be the real juggernaut monopoly? I don't see situation where Palantir goes. I mean, Palantir can fail if a whole data sector fails. I
Yes.
don't see that happening. They made some strategic choices. For example, they said, okay, don't want to work with Russia. They don't want to work with China, and they anticipated a world which is a bit volatile and they're going to be more skirmish, which is happening now. So a lot of companies have actually exposure to it. They are taking write-offs because of Russia. They don't have to take. I mean, their business is actually going up. So when you see that what happened in the price of share, which is actually reflecting it, there is nothing happened in the price of share. That means that component we know on the ground it exists. Palantir has an upside because of the current macro. It doesn't have a downside, but the stock price is not reflecting it. So that means it
Yes.
will reflect it at some point over the time.
Yes.
And
I agree.
you
It's
have seen 1999 2001. Okay, I mean you have seen 2008 2009. People in 2001 will come and tell you, and dude, I have no clue what's going on in the market. Okay, but yeah, I mean when the market is down, it looks pretty erratic. It looks pretty irrational, and that's why you need a sane head to go through with it.
What do you think about this picture?
I got this picture from a couple of my Palantir friends before it was it even came out. No, it's a statement. The way I see it, Tom. See, a lot of companies have come up with the hashtag help Ukraine and do this, do that in Silicon Valley and Wall Street. How many people actually have ended helping the frontline soldiers in Ukraine? So see,
Just Elon Musk, the one I know of, with
yeah.
his internet thing.
Yeah. See, you can help Ukraine in three things. Okay. Like, for example, first thing is that in terms of supplies, refugees, and people coming out of it. The second thing is, see, the only way Ukraine will actually survive this is by winning or by providing resistance to Russia. Okay. So, which companies are actually helping on that front? Palantir is there, SpaceX, Starlink is there. But everything else you talk about and people making all this kind of virtue signaling in a lot of places, yeah, and the guy actually goes there, and it's not they said it. I mean, like the only reason they are there because they're saying that the data analysis and analytics is actually helping them to fight Ukraine better than they could with all of this. And he made a statement. He said that when a country decide that they will go down the wire to save their democracy and their freedom, and then you put them with the power of data, they actually it becomes like what used to be the guerrilla warfare in 100 200 years back, where still you're not that strong, but you can still pose a credible threat to a far stronger enemy.
So before I let you go, you've been vocal about this offline with me in a mid. How long do you think, and when Palantir finds a bottom, I mean, how? I guess the other way to rephrase the question is, how low can the share price go in the near future? So I'm thinking at least $5. That's where I think it will
I mean,
be.
yeah, same for me actually. So two ways to look at the bottom prices. The first point is that you need to see that if you need to liquidate company today, that means Palantir not selling it, just liquidate as of today. What is the value of Palantir as of today, with the amount of their cash, their remaining performance obligation, their IP? You would say that, and again, people can have their own view. You will
Yeah,
say that
6 to 7 billion. 6 to 7 billion. Yeah.
yeah. So you will say that in that particular case, you will still get $4 kind of a per share
Yes.
value because okay. So to me, that's like the liquidation. the going concern kind of valuation for Palantir. Now, when we already have seen tested 6.4, so it's fair to say that 6.4 is achievable on the bottom side. That pretty much given. We have also seen, and there is at least a general consensus in large investor community that indexes will break down at some point of time. And when indexes fall, everything falls. It doesn't matter what price it is. So in that kind of situation, I mean, I wouldn't, I would see that Palantir testing 5-6 for sure. Okay, but that all depends that when indexes break down and how fast indexes break down. We haven't seen a circuit breaker in the recently, and you don't go into recession in these kind of market, especially today.
Without a few circuit breakers, yeah.
You don't have few circuit breakers, so I mean, I would expect 2 or 3 circuit breakers before we make eventual recovery.
Before I let you go, I want you guys to look at the pinned comment. There's a pinned comment in the chat right now that's been posted by Rich. I'm going to put it on the screen. After this call, check out Sachin's channel, search Sachin Vats on YouTube. I can put the link, but it's simpler just you guys Google it. There's not a lot of Sachin Vats, not a lot of these on YouTube. Go subscribe to Sachin. Sachin, thank you so much for the gracious 1 hour. I know you're super, super busy. Some people here don't realize how much of a busy guy you are, but I appreciate you coming in and contributing to the community again. Would love to have you back as always. Thank you for the moderators. Thank you for Daniel, for Rich, for running the chat and keeping it respectful and just super, super wholesome chat today. Thank you to the 500 people who stayed with us through this hour and 5 minutes. And we'll see you all soon. Have a great weekend, and we'll see you soon.
It's always a pleasure to interact with you, Tom, and it's a good learning for me always.
Yeah, same here. Later, boys.